Good morning, everyone. Jesse Webb, TradersPro. Let's look at a few more cracks that we're seeing in this current trend in the market. One of those that's happened today now, or as of yesterday, is we do have a crossover right here on the buy-sell ratio. So basically what that means is that this number down here at the bottom, 0.81, means that there are just more sells than buys now in the database, 1760 to 1430. Now there's can also be a bunch of stocks in that hold range as well, and so sometimes as trends start to shift and move back and forth, then as stocks are moving from that stagnating, non-trending hold signal into either a buy or sell, this can be the early stages. And we've talked about that too, where we had some divergence here. Now we're getting that potential crossover. Again, these are the early times where this trend could be breaking down. The internals are breaking down. Support levels are breaking down. And you want to make those decisions before you get to, before we get down here again. And before this thing really takes off, or this thing really takes off, then these are some of the areas to be able to start to make shifts and say, should I be aggressively bullish? Should I be trying to buy this dip, or is it just a bear market rally? And that would be what I would analyze this as, is still just a bear market rally, and to be very cautious. Now in directional alerts, we talked about this yesterday in terms of this potential counter trend, and we have this setup here where momentum was declining. We had that initial peak first in momentum, which I've talked about during this last bear market, or this entire year, which is on this chart. This momentum will spike. Then you get a follow-up. These were not quite as strong as follow-up as this one, but the setup is very similar. So we may see some retracement here in the markets. Now, whether or not it's a full downtrend, that's still yet to be seen. Futures are down decent this morning, 20 or 30 points, so probably going to open a little bit lower today, but definitely caution is warranted. We've moved back to this mild bearish in a bear market. Again, this bear market setting is this setting right here. In terms of our data, this is a bear market. It's just a downtrend, longer term downtrend. So that's what we're in, and that needs to be our overall bias in terms of making decisions. One other thing that I wanted to show you today is on the Muscle ETFs tab over here on bearish extremes. You'll get some information when you see. Let me show you what a chart looks like on one of these. It looks like this. This is what the extreme is telling you right here. Okay, and when you get a sharp sell-off, either one way or the other, it can happen on the upside as well. But two things are happening here. Number one is these are not sustainable. Once it gets to that edge, it's typically getting ready for a bounce. Now, this is energy, oil and energy. So you have two things happening. Either it's going to look for some support, or this current oil trend is now broken. That's what it's looking like more to me, is that the oil trade actually may be over, where we're seeing almost all of these extremes are almost all energy of some kind. So some pretty aggressive selling right here. And we're also seeing that in some of the, let's go here to the sectors. And if we go to commodities and USO, so USO, this is oil, has had two big sharp days, and it's kind of been floundering here, trying to find a direction with lots of whipsaw, with that slight bearish downtrend still. You can see essentially lower highs, not quite lower lows yet here, but we're getting some weakness in oil. So I'd be a little bit cautious about that oil trade at this point in terms of buying some dips. This market needs to stabilize a little bit more for that to happen. If you don't have full access to the TradersPro site, sign up with us below at the link below, and we look forward to having you. Have a great day today.